Hello, welcome back. We're with Andrew Williams, the CEO of New Pacific Metals, and similar to a few months ago, we've got a big announcement, another PEA, this time not on silver sand, but on Carangas, the project we've been waiting on. So, Andrew, big moment again. So short. It's quite rare to be having big announcements like this so short apart. So, welcome back, and yeah, what's been the current reaction? Because it seems like a very straightforward mine plan, very straightforward economic study, and pretty robust. I'm assuming shareholders are pretty happy with you at the moment.
Yeah, no, thanks, Peter. Nice to be back on your show as well. And we put out our Carangas PEA study, much anticipated milestone for a discovery that we made just 3 years ago. So it's actually been very fast from discovery to PEA, and the numbers coming out today. I think the reaction has been constructive, positive. I think to come up with a discovery like this in such a short amount of time is really a testament to the prospectivity of what's out there in Bolivia, and we're certainly proud of the numbers. I think it shows a really strong project, kind of similar to silver sand, in that nice sweet spot in terms of initial capital costs, $324 million. Nice silver production profile, 8.5 million ounces a year in the first 60 years. Low cost. I mean, really a solid project. And I think the reaction, I mean, just chatting through it a little bit, is this it? It's very simple, kind of open pit, low strip ratio, producing concentrates, manageable capital, and yes, that's sort of the mantra is boring is beautiful. And so we're very pleased with the plan here. Very buildable, executable project, and that's really the way we've been characterizing it is this is kind of always striving for mining for dummies, that type of mine plan, and we certainly feel like we've delivered that with the Carangas project.
Good. Yeah, no, you definitely have. I mean, like I said, uh, we've I've been reading through this. Obviously, the full report hasn't been published on CEDAR yet. I think you've got about 44 days left to get that on there. But from what you have released, metallurgy seems very straightforward. Like you said, it's concentrates. There were a few questions that I had, and to be honest, they're more clarification questions rather than concerns. But why don't we just dive into? Obviously, you mentioned the MPV there. You mentioned. I think within that you based all of this on a $24 silver price, which obviously at the moment seems ridiculously low based on the current sort of 31.8, 32 that we're sort of sitting around at the moment. And I think I also saw that you had the 3.2 year payback within that based on the 24. Have you looked at any, obviously when you did the sensitivity on $30, maybe we can actually talk about it because look, we're there or thereabouts, right? So why don't we talk about it in that sense, on that sensitivity scale, and what does the payback look like there, and how does that change the economics?
Sure. Yeah. No. Thank you. And yeah, $24 seems ridiculously. I don't know, almost pessimistic now. I want to say conservative, but there's a certain point where you just almost look like a pessimist. And I think that there's an element of that. We have our other project, Silver Sand. We released our PFS on that in June, and we used $24 silver, and it didn't look quite as ridiculous then. It's still, this new $30 environment that we found ourselves in was relatively new. So I think back then we probably looked squarely conservative at 24. I'd say that because that price has sustained itself now for a little bit, we're maybe starting to look a bit pessimistic. But we also felt that it's important because we're now a company with two projects, and we did the Silver Sand at 24, so we wanted to be able to stack them up on a like-for-like basis. It's probably an important part of the reason why we stuck to 24. And so that was where we had the $501 million net present value, the 26% IRR after tax. Now at $30 silver, that's where we get into almost $750 million of net present value. The IRR jumps to 34% after tax, and the payback period that we noted in the release at $24 silver after tax was 3.2 years. So that ticks under 3 years when you run it at a $30 an ounce silver price. So naturally speaking, the economics get a lot better with stronger silver prices. We see about a 50% improvement in the net present value when we run it at $30 silver versus 24, and that leverage obviously continues through 32 where we're at today and beyond. But yeah, no, certainly it is a bit low in the context of where we're at today, but it's part of us growing up as a company and having another project. We're not a single asset company anymore, and we wanted to be able to run that at the same price so that we can stack up our two projects against each other. But you know, even at $24 silver, Carangas is still a great project.
Yeah, no, agreed. Obviously, you got your all-in sustaining costs around what, 760. So yeah, you're right. Even at $24, you're sitting pretty. So some of the questions I really wanted to run through with you, which because there were some aspects in there that I either didn't know or I just wanted to get some clarification on. One of them was, so essentially you were talking about, obviously you'll be making a concentrate, and one of them is there is some byproduct with zinc and lead. When you did your sensitivity prices, I think I saw that you used, I think it was around $1.25 zinc and about 95 lead. Lead is around that price at the moment. That's actually still quite conservative for the zinc. How much of a proponent of the, I guess, the payable dirt or the concentrate is actually in those byproducts versus the silver, I guess, is the first question.
Yeah, so the proposed flow sheet has us producing a silver concentrate with lead, so silver lead concentrate, and then a separate zinc concentrate with just a little bit of silver in it. We want to make sure we get as much silver as possible into that silver lead concentrate. You get paid better. But within those two concentrates, look at the overall metal suite, 76% of the revenue is from silver when you combine everything in terms of payabilities. And then that remaining 24%, I believe it's somewhere in the order of magnitude of 16% of it is from the zinc, and then the balance coming from the lead. So zinc is the more dominant byproduct relative to lead, and then yeah, lead making up the little difference. But yeah, predominantly it's still very much a silver dominant system. So they are true byproducts, not co-products. And when you have over 75% of the payability coming from silver, but yeah, zinc's certainly the next big byproduct with a sprinkling of lead at the end.
Okay, and you obviously use the zinc price, like I said, of around 125. Zinc price currently is about 145. So you're again being quite conservative with what you're putting out there. After that step, and I want to go into the mine plan and a lot of other aspects, but in terms of the actual end product, one of the suggestions that you had was that there was a government proposed smelter within Bolivia that you may be able to then obviously send your concentrate to. Obviously, keyword there that I saw was proposed. Where is this smelter? What are the intentions? Is it up and running yet? Is it something that's being built? What's the current state of play there?
Yeah, no, and this is something that's really exciting for us in Bolivia to tie this in. This proposed zinc smelter has been something in the works for a while now, and so it's something that predates the discovery of Carangas. I think it's just a very nice coincidence that these things are potentially coming together at a similar time. So the smelter itself, you can Google it, Bolivia zinc smelter. It was in February of this year. They announced $350 million of financing from Exim Bank to construct the zinc smelter in Oruro. Now, our sources are such that they haven't yet broken ground, but with the financing arranged, and I believe a lot of the final planning arrangements are in the late stages. So we would expect them to be constructing at some point here in the not too distant future. But the idea is that the dream is that our development scenarios at both the smelter and Carangas can sync up nicely, because back of the envelope suggests that the Carangas project can produce about a third of the feed for that zinc smelter, and so I think as a national priority, that's certainly a narrative that has got a lot of support internally amongst both the federal government as well as the government from the Department of Oruro. So it's certainly something that we want to continue to lean into as we continue to move the project through the next phases of development.
Okay. Okay, that's quite interesting. So we'll see how developments go there, obviously, over the next couple of years. In terms of the actual mine plan itself, like we were saying, it's super straightforward, open pit. I think the depth of the open pit was at about 280 from memory.
The depth, yeah, about 250 roughly, like final depth. But I mean, there's a big chunk of it. It's just only down to 200 meters, so yeah, very shallow.
Okay, very shallow. I'm going to overlay one of the graphs that you have, or the sort of the wireframe and the block model onto the screen now, so people can see it. So, in terms of this strip ratio, and I think this outlines it very easily, is clear. Essentially, it's the areas in red are the within the cutoff grade or above the cutoff grade, and they're the areas that essentially that you'll be targeting, if I'm correct there. So I think that's quite important to visualize, so people can actually get in their head how simple the sort of mining process is. One of the other areas, and I'll pull up this next one which was in your announcement. I saw that within the first 2 years you had no mine to mill within this slide, but you had sort of mine to stockpile for the first 2 years. So that isn't something I'm too familiar with, where you sort of see 2 years of just stockpiling before you actually start production or start actually, creating the concentrate. What was the rationale behind that? Is that whilst you're in construction that you'll be actually making these stockpiles, or is this for later down the line?
Yeah, great question, great pickup. So those first 2 years, that is us mining and stockpiling predominantly oxide ore. Like the majority of our resource, I think it's about 85%, 80 to 85% is fresh material, so it has been unoxidized. And so the flotation response is excellent. Now there's that remaining 15-20% that is comprised of some oxides, a lot of transitional material that doesn't generate as strong of a flotation response. And so what we wanted to do, we wanted to get at mineralization that could feed the mill as soon as you flip it on, that had high recoveries, high NSR values. And so it made sense for us when we were doing the mine scheduling to chew through a bunch of that oxide mineralization early, because the oxide tends to dominate closest to surface, then transitional, then fresh on the bulk of the ore body. We wanted to get through that sufficiently so we could have nice open faces, nice open benches of predominantly fresh mineralization to generate that payback when we need it the most early in the mine life. And then the idea is that we will strategically blend the ore with those early stockpiles over the mine life, as well as predominantly the last 3 years are 100% stockpile processing. But the idea is when you process some of that oxide material with the fresh material that floats well, some of that oxide could potentially get a free ride up with some of the transitional material, and hence improve the overall recoveries. But generally speaking, yes, it's to get at fresh material as early as possible, because we want to hit the mill hard with that mineralization as soon as we can. While our debt level is maximum, and we need to pay that capital back as soon as possible.
So in terms of the timing, is this something, say for example, I don't know, a few years down the line you get your permits and you make a construction decision. This is something that you'll be doing from the get-go.
Correct.
Whilst you're in construction. Okay.
Correct.
All right. So then once the mill's built, you're ready to go.
Yes. So we're mobilizing the mill construction team and the mining contractor at the same time.
Okay. Perfect. So I think you mentioned part of the metallurgy there with the stockpiling. Obviously, where you are going down the concentrates routes, a lot of people see that obviously not making a final product. That can sometimes be, obviously it's a trickier thing, but sometimes a negative thing. How does that impact your metallurgy rates going down the concentrate route?
Well, I mean, that is what Mother Nature's given us. It hasn't. I mean, we could potentially. We looked at leaching some of the silver out of the silver lead concentrate, but then you really do, and producing a finished product, doré, but you do end up sterilizing some of the byproduct value from both the lead and the zinc. So at the end of the day, it made sense to go down the concentrate route. But I mean, so it was an issue of just listening to the ore body and respecting the data that was coming back from the test work that we were doing. I mean, ideally, you like to produce a finished bar on site, but this is how the metallurgists advised us. We got a fantastic metallurgist that we work with internally here. We just felt like this is the best, the way to extract and squeeze as much value out of the system as possible.
Okay, good. Look, I think on a really positive note, something that I did read, obviously, directly alone, this project, not even including Silver Sand, is going to be responsible for hiring around 500 people in the local community and obviously around the mine. Um, I think we spoke about this when you released Silver Sand, and I think one of the I don't think you can really question too much the simplicity of these assets and I guess the ease of which it could be to build them. I guess the main question is, and I know we did speak about this before, so I guess we can keep this bit fairly short, but is the permeability of it? What's the local support like? Obviously, this is going to be huge for the local economy, but what are you feeling on the ground when you're talking to the locals? What's the local council or the local municipality like? And really, what's the permitting process from here?
Yeah, that's great. I mean, that's what we've been trying to convey is for us, our next step is firmly focused on the permits before we proceed to further studies, feasibility study. We really want to get a very good line of sight here on the issuance of our environmental permits, and we've certainly got a number of milestones left to check off here at Carangas. Like I said, it's just 3 years ago that we announced this discovery, so it's all happened quite fast. I think initially we've had really strong engagement with the communities at Carangas. I think we've been very blessed and fortunate with the support that we've received so far. I mean, we're just about to embark on the process of collecting our primary socioeconomic baseline data. So we're working with the community in order to roll out a plan to complete that work. That's where we go and go door to door and sit down with people and get a better understanding of who they are, what they do, and to help inform ultimately a community agreement that is sustainable in the best interest of everyone. So I think we're moving down that process nicely. We've also had some really strong support from the state level government, or the Bolivian term is the departmental level government, but it's kind of like a state or a province if you're familiar with the U.S. or Canada. From Oruro, they've been really supportive. I mean, the last time there was a major mine in Oruro was back in the 80s and the 90s. It was Corocoyo. It was a project that was very successfully run by Battle Mountain, which was then acquired by Newmont. And that operation has left a very positive legacy in Oruro, and there hasn't been any real mining activity since. And so the departmental level government, they've been very supportive and aligned with the development philosophy, and then right up to the national government as well. I mean, just talking about this potential zinc plant and the potential from having that feed from the Carangas Project, be about a third of that, is something that is really intriguing to the federal government, and the federal government also, same thing with our Silver Sand project. They need foreign investment. I think it's there's a bit of a moment here in Bolivia right now where they need to bring in new forms of foreign investment, and so just specifically for Carangas, that really nice alignment so far, right from the local community, from the state government to the federal government is what we've got currently, and so it's up to us to continue to sort of lean into that and make sure that we go about the permitting process the right way, and that's what we're going to do here in the next phase of extracting full value from this discovery for our shareholders.
Is in terms of full value for your shareholders, obviously I think, what is it, 16-year mine life as it stands. That's including the stockpiling years, I believe, isn't it? Does this draw a line in the sand, so to speak, with Carangas, or is there more value that you could potentially add through the drill bit? I guess, is this still an exploration and development play, or is this now a purely development project in your mind?
So the exploration potential is there at Carangas. It's very real. We've got a slide in our corporate deck, and it shows we did an IP survey last year, and it flagged 6 big fat geophysical anomalies because the Carangas discovery was undercover. It was a blind discovery, and one of those 6 anomalies is the Carangas project as we know it, this $500 million net present value project. And so there's still 5 more anomalies in the greater basin that we've yet to drill. And so But part of our corporate strategy, staying disciplined, is we want to first get a little bit more clarity on our line of sight towards getting our permit. So that's what we're going to be working towards here in the near term. And I think once we've got that clarity, plus we're in a market environment where companies are getting rewarded for exploration upside and taking risks via the drill bit. I think once we've got those two parameters in place, we'll go ahead and start to test some of those anomalies. But I think for us as a company, managing our treasury, managing our share count, our dilution is something that's really, really a core part of who we are at New Pacific. And so for us, we're not going to put that money back into the ground until we've achieved those milestones. And so that it's there. It's not going anywhere. Whatever's underneath isn't just going to lift up from the ground and fly away. It's there when we want to go and drill it. So we're just going to be patient and disciplined and do what we got to do, take care of our immediate business, and then we'll hopefully get in and test this idea that what we found is just a small part of a much bigger district at Carangas.
Okay. So it sounds like you want the confidence or you want the reassurance from the local government or the government itself that the permits are on their way and obviously that will then warrant further investment into the projects. You said in the near term you want some clarity around what needs to happen in your model? What would you like to see? Do you actually need the physical permits in hand ready to go and build before you do this? Or what in your mind does that look like in terms of having that reassurance to then go and do some more drilling in the area?
Yeah, no, definitely you don't need to have that full permit in hand, but there's some major boxes that we'd like to check, and we outline them in our press release. The first one being having a community agreement in place, something that outlines a sustainable development agreement between us and the local community. So we want to have that completed, and as well we want to substantially. So maybe the second point that we talked about is we have an exploration license at Carangas, so we're in the process of converting that into a mining license, and that's a process that takes time. It's the first one that's been done under Bolivia's 2014 mining code. Our silver sand project was grandfathered. It had an existing mining right that was grandfathered into a new mining right, but Carangas, we're starting with an exploration license because we free stake this project from the government at zero cost. And so we want to have our mining license in hand, and then even once we've got our mining license, we also then need to have an environmental license, which is that last piece that we also want to work towards. We don't want to necessarily say it's got to be complete and stamped, but we want to feel like we've done a good chunk of the heavy lifting in order to get that environmental license, and we're feeling good about completing everything. It's the piece. And the fourth piece as well that we mentioned in our press release is getting some legal security over Carangas' location within the 50 kilometers to the border with Chile, which is what other projects elsewhere in the country and other industries have been able to accomplish. And so we also want to make sure we get the same security at Carangas. So there's a number of boxes that we do want to check, but they do fall short of a full-on EIA completed and in hand. But probably if we rewind that, we probably somewhere probably, let's say 80% of the way there, something like that, where we're just a little bit more advanced than we are today before we commit our shareholders' funds towards a feasibility study and getting this thing to the point where we can make a construction decision.
Okay, that's interesting. And I guess I know it's always tough with these things, but in terms of the timing and what it sounds like, really this is now the pure focus, right? Is getting these permits in hand and really de-risking these projects for this construction decision down the line. How long are you and the team and your advisors? How long are you sort of thinking that this process may take until you may be able to then start going back to do some drilling, or like you said, maybe looking at this in a lot more detail with the engineering and the feasibility studies, etc.?
Yeah, we're suggesting no earlier than sort of the middle of next year, second half of next year. So it kind of gives us a good 2 or 3 quarters, 9 months at least to really push on these different initiatives with our team and our advisors, etc. and then hopefully at some point in the second half of next year we'll have a lot more visibility and confidence into getting that successful outcome with our permitting, and then make a decision on that next big spend for the technical evaluation before we make a construction decision.
Okay, so really the big news flow items that we should be expecting over this 9-month period up until then are some of these boxes that you're talking about really getting ticked off. And I think, to be honest, in a way that they're just as important, if not more important, than the drill results and the new studies and whatnot themselves, aren't they? So I think I'm hoping that as you do go down this de-risking path, I think we'll start to see some appreciation there from your shareholders. In terms of is there now a priority in terms of the permitting route of Silver Sand and Carangas? Is this something that you have to do jointly? You mentioned you got the mining license already at Silver Sand. Does that then make that project a bit easier to go down that route with? Will that be a bit more, I guess, a faster process because you've already got that one in place? How do you toss up the two projects now, and how do they look moving forward?
Yeah, I think with both projects, I think the road at Carangas is longer, right? Because we're starting from an exploration license only versus at Silver Sand. We've got we already have our mining license. We just need our environmental license. Silver Sand, we've been working away on this community agreement for quite some time now, and for us, that's kind of more of a binary. Like once we get that, we feel like the path thereafter should be quite rapid, versus the Carangas project is a little bit more of a sort of a process oriented, step by step, but we'll sort of get to the end, and so which one gets there first, I still think it's probably more likely to be the Silver Sand project, but for us it's just we're going to keep pressing at both projects. It also it improves our odds of getting a permit at both projects, having both of them available, so that one government we can use best practices and help encourage and push the other. So we do get some benefit having both projects going down the path, but really, for us, we're going to push on both projects, and whichever one turns up first, then we'll go with. I mean, again, they're both, Silver Sand $700 million of NPV, Carangas is 500. I mean, they're both in the game. Sort of, I characterize it as being like if you're 350 pounds versus 300 pounds, like in either scenario, you're overweight, and so versus that extra 50 pounds, from our perspective, our goal here is to have a great project that is permitted and can be built. And so for us, we're going to keep pushing both projects, and hopefully we get two of them that turn up at the same time, and then that would be a real Hollywood problem. But for us, we're going to just keep pressing and see which one we get first.
Good. All right. Well, look, if you do get to that point, like you said, a real great problem to have. I think with Carangas, you've got like we mentioned before, 500 direct employees. I assume it'd be very similar with Silver Sand. You'd be potentially employing over 1,000 people in Bolivia, which is quite impressive. I'd imagine that would make you, especially in the mining game, probably one of the bigger companies, especially with obviously the royalties that also go to the state as well. That you'd be quite a meaningful contributor to the area, which is great to see. So given the fact that Silver Sand is more progressed, are you thinking that potentially more work can be done on Silver Sand within that 9-month period? Because I'm assuming when you're saying the 9-month period, that's more for Carangas. So potentially some exciting things to come on Silver Sand a bit sooner for that investors can have a look out for.
Yeah, you got it. I mean, I think it's our expectations are to have some positive news before then at Silver Sand. But there's no guarantees in this business. But we're cautiously optimistic that we'll have something to report on, and that would so we wouldn't slow down at Carangas, right? We still want to keep pushing forward at Carangas, independent of what happens at Silver Sand. But yeah, I mean, that's the beauty of we mentioned in the press release, having this Carangas project now gives us balance and scale in our portfolio. So it's nice to have two projects that can sort of ebb and flow as the local circumstances dictate.
Good. Okay. Well, look, congratulations again on another outstanding PEA. Like I said, it's not often that within the space of a few months a company releases two PAs on two projects that both look like they should be built. So, congratulations, and yeah, looking forward to catching up when we get some momentum on potential permits.
All right. Thanks, Peter. Very nice catching up with you.
You too.